Good day to everyone. I am Tirani Gayashani and today I am going to discuss about two major models in corporate governance. Those are stakeholder model and shareholder model. In here, I would like to compare key characteristics of these two models and how they influence to corporate decision making. And I would like to take some real world examples to explain this briefly. The shareholder model argues that a company's primary responsibility is to maximize shareholder wealth. And according to Friedman in 1970, social responsibility of a business is to maximize the profit while operating within ethical and legal boundaries. According to this, managers of shareholder model should consider about profit maximization, focus on investors, short-term financial performance, strong management accountability, and dividend growth. And all the decisions are evaluated based on this profitability and stock market performance. Apple Inc. is a good example for a shareholder model because Apple Inc. focuses heavily on increasing shareholder value, product innovation, high profit margins, share buybacks, and dividend payments. And also, they have taken some corporate decisions like premium pricing, efficient global supply chain, large share repurchase programs, and investment in innovation. According to those decisions, there are some positive impact as well as challenges. When we consider about this positive impact, we can identify higher shareholder wealth, strong financial performance. And as challenges, we can identify labor practice criticism and supply chain sustainability concern. When we take this stakeholder model, the stakeholder model argues that companies should create value for all stakeholders, including employees, customers, suppliers, communities, government, environment, and also shareholders. And this model has developed by Freeman in 1984. Unilever is a good example for this stakeholder model because Unilever follows a stakeholder-oriented governance models and they have taken some corporate decisions like sustainable sourcing, reducing carbon emissions, employee well-being, community development, and also ESG investments. According to these decisions, there are some positive impact and also challenges. Positive impact, we can identify strong brand reputation, customer loyalty, long-term sustainability. And as challenges, we can identify higher operational cost, balancing profitability with sustainability investment. And there's another example for stakeholder model that is Patagonia. Patagonia places environmental and social responsibility at the center of its governance. And they have taken some decisions to donate profits to environmental causes, uses recycle materials, ethical sourcing, and encourages customers to repair product rather than replace them. According to these decisions, there are also some positive impact and as well as challenges. As positive impact, we can identify strong customer trust, sustainable competitive advantage, and global brand reputation. And as challenges, we can take lower short term profits and higher production cost. There are few differences between this shareholder model and stakeholder model. When we compare these models, we can identify that shareholder model focuses on shareholders and profit maximization to gain short-term profitability. But in stakeholder model, they are focused on all stakeholders and consider about social, environmental, and financial performance to gain long-term sustainability. This is the critical evaluation of these two models, and we can identify advantages as well as disadvantages from these two models. Uh, Under shareholder model, we can identify advantages like clear financial objectives, strong investor confidence, and efficient resources allocation. And as disadvantages, we can identify short term decision making, environmental concerns, and employee welfare may receive less attention. When we consider about stakeholder model, we can identify advantages like sustainable growth, better corporate reputation, employee engagement, and also strong ESG performance. And as disadvantages, we can identify complex decision making, higher cost, and conflict in stakeholder interest. Finally, this is the conclusion of this analyzing, and we can identify both governance models and influence strategic decisions differently. And the shareholder model prioritizes financial returns and investor wealth, while the stakeholder model promotes long-term sustainability and responsible business practices. And finally, we can say many successful modern companies now adopt a hybrid governance approach because it can balance shareholder expectation with stakeholder interest to achieve sustainable competitive advantage. This is the references of my presentation, and thank you for attention and have a nice day.